Hi everybody, welcome to another update on the gold forecaster index, the holy grail to predicting gold prices. I was very bullish the last time, and gold has gone up another $100 from 2,500 to 2,600. So where do we stand now? Are we going to go to 2,700, another 100 up? Let's see. The way to do this is looking at the gold forecaster index. This is the holy grail, and it is a leading index. So let's see what our data point gives for this month. Apparently it's up. So this is the data for August. Is this the latest data? You can actually look at the gold forecaster index here. I have two charts. This is the preliminary gold forecaster index, which gives a faster data point. And here you can see data for August. Okay, so August is the latest data. And here you can see it as well. August is the latest data. And when we go a few weeks out, then this will become September. And then another few weeks out, this will become September. But you can see that we went up a tiny bit in August. So I think that gold will go higher. You can see here the trend is up. The trend is your friend. So there's no problems at all. Gold will go higher. Okay, this is still the same. It's starting to move up. That's good. That's good for gold. The misery index is lower. That's not good. We had a lower unemployment rate. So that's negative for gold. But on the other hand, we still have inflation. Let's see what unemployment does next month. I don't think it's over yet. But yeah, I did expect higher unemployment and didn't get it. Okay, this is not doing anything. GLD stock level is still bottoming out, so we have a long way to go. This is the long-term trend, and this still needs to go up, and that will bring gold to all-time highs. COMEX still bottoming out. Gold deliveries are actually moving this direction, so up. That's good. LBMA, yeah, we had a tiny dip last month, but overall this looks like a bottoming out process. So I think that gold is still going higher. Here, India gold imports were this is a high, a multi-year high. Maybe it's because of the lower taxes on imports, but it is higher, and China is also starting to move higher. So it's looking good. India's silver imports also very good. Except for this one, Chinese gold imports looks like it's dropping a bit. Yeah, you can't keep having these Chinese buying gold. Gold price is high already. So yeah, and they are not buying that much anymore. Silver, yeah, still in an uptrend, so I think everything is just fine. There could be some retracements, of course. Um, Central banks are still buying, I think. Next up, yeah, China didn't buy any gold last month, still empty, but maybe they are buying secretly. That's possible. But anyway, you can see they are still increasing their gold position, 4.2% now, and they are selling their bonds. US mint sales were not that good, so the retail is not in yet. But that's a good thing, because then we don't have a top yet in gold, and we're still bottoming out. Premiums are still low, so no retail buying. Same with junk silver, very low premiums. This is worrying. We are at minus 5% Shanghai gold premiums. I don't like to see this. That means that the Chinese are not buying that much anymore. You want high premiums, because that's typically a bottom. Now it's neutral to bearish. So don't expect gold to go up that fast anymore. You should be bullish here. And here I'm a bit neutral. Silver was at 8% premium. That's better. So silver looking better from China perspective. CO2 report here, we can see that open interest is still rising. So that trend is still intact. Smart money, I think they are still bullish. So there's nothing to worry about gold yet. Swiss franc also up in a positive. This tips curve can still move higher. Real yields can still move higher. Seasonality is not looking that good now in October, so expect a little bit of weakness in the coming 2 months. Yeah, we are now in October, so it's going to be flat. Wait until November, and then it will rally again into the end of the year and into March. I think bullish percent index was bearish, so that means we could turn back bullish. Here, currency in circulation is flatter, but there's still a long way to go for gold to go higher. Here as well. This, well, actually, this doesn't look that great. What's this? Something happened between the 30-year and the 10-year. Yeah, so this is going back bearish. You can have some retracements, of course, but the trend is still up, okay? Here as well, above 0, but weakening. Okay, let's see how this goes. Debt has hit all-time highs, by the way, so that's good for gold. Deficits probably going to rise. You can see here as well. If you have a lot of deficits to GDP, then gold goes up. If you think deficits will continue to go up compared to GDP, then gold will go higher. Near-term forward spread is still in negative territory, so this can still move up, and that's the springboard technique. If we have a negative near-term forward spread, that means gold can go higher. So this is the latest data, still negative, so this will shoot up and will drag gold with it. Okay, so 3000 is still in the cards. Rate cuts. Okay, so we did have data coming in that says that they will not cut that much anymore. So this could go down less. Yeah, that means that gold will go up less. So let's see how the unemployment rate and employment situation goes. because we had good numbers, and that's not good for gold. Yeah, this is the Fed funds guidance, and you can see here the 2-year has moved back up, so less rate cuts, and this thing also went up. The lower line went up, so yeah, we are going to see less rate cuts now, so that's less good for gold. Foreign gold deposits are still up. That's good. So central banks still buying. Gold futures curve is also up. So no worries yet. Central banks are doing QE now, and they are starting to do QE. That's good for money supply and will push up assets. Yeah, money supply is starting to move back up. That's good for stocks and gold. Then on to deficits. We have a lot of budget deficits here, so this is still going lower. Current account is also going lower, so that's bad for the dollar. But the latest data tells us that it has improved a bit. Yep. So a little bit of improvement, but long term, still going down. This is also telling us that this is going down. Imports up, but exports less up. So, yep, more deficits. Export and import prices flat. Imports up, exports up. Yeah, this is good for GDP, but this is only Q. What is this? This is Q2. Okay. Yeah, this tells me that there is not a lot of problems in the stock market. If there is a recession, this should go down, not up. Okay. And no recession means not good for gold. Then here, okay, the trade balance has not gone down that much, so US dollar is going to be pretty stable for now. So, okay, so it's not that bullish anymore like last time for gold. So we need to watch out a bit. Capacity utilization still up, so that's good for inflation. Okay, we still have inflationary periods. Job openings are dropping. Okay, but we didn't see higher unemployment rate. So, yeah, we need to look at more data coming in. Deficits are still going to stay, but down a bit. So, yeah, we are not going to see these things anymore. These are very bullish for gold, but looks like this is a bit flat. So slow grind higher in gold. Job hiring is worse than COVID. Okay. This tells me there should be a recession, but we are not seeing it yet. We are not seeing it yet. So a lot of contradictory information. We also had an FOMC meeting. Okay, so this one was the dot plot. This was the dot plot in March. Look at the rate cuts, and now in September, this is September. Apparently, yeah, apparently the rate cuts are lower, so more rate cuts in September and less rate cuts in March, FOMC. Okay, so this was bullish for gold. Core for data, you can see that the amount of claims in US dollars is going down, a new low. So we are getting away from the dollar. I expect the dollar to keep on dropping. Probably not at a fast pace like this, but this is more a flattish grind lower. Indian oil demand was slowing, so it's not like India is going to have huge increases in demand. And we have seen that oil is pretty weak. It's only up due to Israel and Iran, but the fundamentals of oil are not that great. Oil is also going into surplus next year, so watch out. We are currently here, going into surplus. Same here, going into surplus. So I would be watching out, not buying oil companies. Also this year, this is China demand. You can see that demand is just flat. There is not a lot of diesel demand in China because all that demand is going into fuel cells, fuel efficiency, LNG, electric displacement. So that's not bullish oil, okay? Diesel and gasoline demand flat for the coming years. That's not bullish oil, okay? Consumption is not going up that much. This is global consumption, by the way. Per capita consumption is even going down. So yeah, I like gold more than oil, as you know. China diesel consumption is down. You can see the red line is below trend. And we have OPEC production increases for next year. Okay. What is this? 2.4 million barrels per day for next year. This is not bullish for oil. Now on to gold. Gold is of course much better, and this is the sweet spot with the lowest risk, highest return. You need to have 20% in gold, and we know that financial institutions and people around the world are only at maybe 2-3%. So there's a long way to go to get to 20%. So yeah, we are going into a gold bull market. Also, Charles Nenner has a prediction. He says that gold will rise for the next 3 years. US dollar is going to drop to 78 by next year. Stocks will fall and bond yields will rise. So I agree. I agree that bonds are not the best place to be when you have inflation. Stocks are overvalued. I mean, they could go up if you print more, but if you print more, gold will rise probably even more. So gold still seems to be the best play, especially when the dollar goes down to 78. So still looking good for gold. I created a chart for silver. Apparently, a lot of people think that silver will break out next year. So in 2025, we are going to see silver above 30. Only a few banks here say that silver will drop below 30, but everyone else says it's going to be above 30. So silver will go up because silver is currently at $30. So if you believe these analysts, you are going to see 10, 20%, 30% in upside. And some of them even think we go to 50 or 60 silver. So yeah, if you believe this, you can get into silver miners. I like gold miners more because it's more reliable, but I'm also bullish silver. They just both go up at the same time. India buying the dip in gold. Yeah, I created this chart correlation, and apparently India likes to buy gold at bottoms. So here a lot of imports. These are very high imports um, in August. So maybe this is still a bottom, okay? Based on this correlation. They like to buy bottoms. Maybe this is a bottom. Who knows? We are still at 2,600 gold, okay? It can still go up. We will see. China has come back also today. Apparently they haven't bought anything because gold is down 1%. But yeah, let's see tomorrow. And then we will end with this nice gold fractal breakout multi-decade chart. This looks like a big saucer pattern with cup and handle. And when you look at this trend, if we actually break out from here, then we can go to 3,500 and even higher. So I'm positioned for this. It will take some years, and then gold will go up. Charles Nana said that gold will go up in the next 3 years. So I think this could indeed break out. Not sure how high. We will see each month, watching the gold forecaster index, and it looks good. Okay, so there's a conclusion. Gold will still go up, okay, but maybe less. I did see some of these indicators that are not that bullish. So we're going to go up, but not that fast anymore. Okay, and I'll see you next time.